How have you analyzed the steps taken so far by our central bank in order to keep the currency stable, in order to manage inflation versus growth, tilting towards growth while still taking all efforts to manage inflation?
So far, I think the RBI has done well. They thought that they probably were done with the last policy hike, 25 basis points in February. Unfortunately, the data about headline inflation and core since then have come slightly higher than expected, even if wholesale inflation is lower. There is a state of the world in which, unfortunately, inflationary pressure may be persisting, and therefore the RBI might be forced to hike slightly more and withdraw further liquidity if the world is a weaker one. And if the world is going to be one which there'll be financial pressure on the currency, on the balance of payment and so on, then the policy trade-offs are going to be challenging, because either you prevent the currency by essentially weakening by doing forex intervention that has cost and benefits, or you let the currency weaken. If it weakens too much, that may be a source of imported inflation, or you hike essentially policy rates in a way that weakens economic growth. I think that you have to manage it carefully. I would say that the margin, while the currency is weakened on a number of measures, say the real exchange rate equilibrium, probably there is still room for some depreciation, especially if you're thinking about having export-led growth, either of manufacturing or also of services. So a gradually falling currency may not lead to significant imported inflation, especially because some of your raw material, like oil and energy from Russia, is bought at not international market prices, but discounted prices. Yes. And the benefit of having a slightly weaker currency, like in the case of the Asian tiger, might outperform any kind of concerns about imported inflation. So maintaining a competitive currency should be actually one of the important objectives of the RBI.
Talking of currency, we are also trying to conduct international trade with a lot of partners across the world in our own currency, be it Russia, Iran, Africa, parts of Southeast Asia. Do you see that gain momentum?
Yeah, I'm on the view that overall there will be a process of de-dollarization over time. Part of it is just structural. The share of global economy of the U.S. is falling from 40 to 20%. Doesn't make sense for the U.S. dollar to be 2/3 of all international financial and trade transactions. Part of it is geopolitics. The U.S. is weaponizing the U.S. dollar for national security and foreign policy objectives. That, of course, makes the rivals of the U.S. uncomfortable, but even some of the friends and allies of the U.S., whether in the Middle East or even in Asia, are a little bit queasy about that. Mm-hmm. And you can see how the rupee could become, for some of the trade that India does with the rest of the world, especially South-South trade, could become a vehicle currency, could be a unit of account, could be a means of payment, could become a store of value. Certainly, rupee over time could become one of the variety of global reserve currencies in the world.